the mood of my presentation, I actually carefully usually pick the first slide, but probably maybe the first thing I want to say is the WASI is back. So finally, like after the government shutdown, we could access some of the updated data from the USDA. So primarily, my presentation today will be based on this updated WASI report. But still, actually, at the beginning of WASI report, this time USDA actually clearly stated that we are going to have somewhat limited data access even on the end of USDA, because still like they're in the process of data recovery and kind of rebuilding their database while they are getting out of this shutdown period. So that's just something that we have to keep in mind. With that, I want to actually start talking about what's happened in the meantime. So during the government shutdown, and when the market really didn't have any government resources, we could actually see something happen in the market, especially during maybe October period here, like during the maybe past like 45 days-ish. We see the graph is showing the corn December futures contract price and soybean January futures contract price, which are like, respectively corresponding to the left and right y-axis here. And as you can see, at least during the past 2 or 3 weeks, actually we see market rally. And there are two reasons why. First one is people actually kind of questioned like the September loss report. So people anticipated that there will be pretty sizable production cut anyway whenever the USDA comes back, and there are going to be some supply number adjustments. So that kind of hopeful belief actually affected this market rally. And the second factor that affected this market rally was basically because of the meeting between the two presidents, President Trump and President Xi. When they were meeting in APEC, they thought that there's going to be some good deal between the US and China, so the China market will be open sooner or later. So those two kind of factors actually affected this market rally. And the last data point in this figure is actually the day when USDA actually released a new WASI report. And surprisingly, actually, at that time, soybean got like 19 cents down and corn 12 cents down. So it actually disappointed the market. So probably you can guess what the USDA WASI report will look like based on even this price movements. Okay. So with that, let's go to the details of what's happened here. First, this is pretty busy, like corn balance table, but I want to emphasize a couple of points in this table. So probably to look at this table a little more easier, let me just highlight two major columns that I want to emphasize. So the blue column is basically like highlighting the new WASI estimates, and the red column is emphasizing the year-over-year change. The first thing I want to emphasize here is the yield estimate. So USDA, of course, they cut down like a little bit of the yield, which is just 0.7 bushels per acre, but still like it is record high, 186 bushels per acre. That's the national corn yield that USDA estimated. And like, actually, like, based on my reading of the market, actually many people anticipated USDA will cut the national yield to maybe a little above 180 or even like below 180. So compared to that, it is still like very high. So that really disappointed the market, and that's why actually we saw the future market reaction, which was pretty like disappointing and price decline on the WASI day. And also the other thing I want to highlight here is actually the increased beginning stock, and that is mainly driven by the corn feed demand shrink in the past marketing year. And this is actually relevant to what Chen T said in the Mexico's disease issue. So I'm going to actually talk about it later a little more. But basically, because of that, the domestic corn market also affected by that, because we got a shrink in the cattle and pork. So basically, that corn feed demand has decreased, and that has influenced this marketing year's supply number. So we had increased old crop corn coming to the market additionally. So altogether, USDA expects that we are going to have almost 18.3 billion bushels of total supply. So the 16.7 billion bushel like in 2023-24 marketing year was almost a record high total supply that we had. And even compared to that, we have never touched 17 billion bushel total supply of corn. But now this year suddenly we are expecting well above 18 billion bushels of total corn supply. So this is really like overwhelmingly large size of total supply, and that is kind of making many people concerned about the corn fundamentals. But also at the same time, some like kind of silver lining issues or news that we are seeing in the market is USDA also see like there are like huge demand increase in the next in this marketing year. As I highlight, corn feed we expect greater than like 600 million bushels compared to last year, and also like when you look at the ethanol, it's going to be 164 million bushel increase, and exports we expect 284 million bushels increase. I see the good rationale of USDA why they actually set up this target number, but also like somehow I also have kind of a little bit of a question whether we actually can achieve this number. For instance, probably I'm going to highlight this again, but the New World screwworm issue in Mexico that will really deteriorate our corn feed demand progress. So still, like there will be probably some kind of wild card that potentially affect this export performance we can see. Ethanol side, as Gabe explained about the biofuel market, it is pretty mature. So I'm not sure whether actually we can see, unless we have a substantial policy change, we can achieve this 164 million bushel increase in corn use for ethanol demand. And exports, this is actually an interesting part. As Ian said, that we have very dynamic trade markets this year and maybe last marketing year as well. But corn export actually did really well like last marketing year. When you look at the 2024-25 column exports, that 2,830 million bushel, that is actually our record high corn export in our history. And even compared to that, the USDA expects we're going to have like 245 million bushels larger exports. So the total export will be about a little above 3 billion bushels. So altogether, we have really like large size to come as a total supply, but also we will have, I think, greater than like 1 billion bushel increase in the total demand. So at the end, still we're going to see quite a bit of increase in the stock level at the end of this marketing year, but based on what USDA predicts, it's going to be making about $4 corn as a season average farm gate price. So that's the current situation. And probably as many people still like question the production side, I want to actually show the map. This is corn yield, updated corn yield map by the USDA. And this is actually a third consecutive year that the national yield has increased. And when you are reading the map, whenever you see there is a shop sign, is actually indicating that the region is having the record high corn yield. So many states, including Iowa, Illinois, and Indiana, like Wisconsin, they are expecting to have record high corn yield. And also the national corn yield is 186, which is having a shock. So it is 3.7% increase compared to last year, and this is also record high corn yield. When you just look at Ohio, we are expecting 194 bushels per acre. That is the state level average, and it's going to be 9.6% higher than last year. So looks like this is kind of what USDA believes, and I don't know how much actually southern rust issue, which was happening or happened, Iowa, South Dakota, and Minnesota actually affected this adjustment. But still, I think the big story doesn't change. We are going to have really large corn supply, and now the issue is that whether we can quickly digest this supply or not. So that's basically the whole story. So kind of the big picture of the corn is kind of a mixed emotion in the market. So we are a little bit worried about this ample supply, but also at the same time we see pretty good progress in the demand sectors across the board. So it's kind of a pretty good balance now. But also we see like whenever we will have any demand progress issue, then probably the market will struggle a little bit. Now let's move on to the soybean side. So in the soybean side, if I just highlight the two columns again, we are expecting 53 bushels per acre as a national soybean yield, which is again record high. So by and large, actually, we had like pretty good growing season across the board. Not specifically Ohio, but especially in the western corn belt. So because of that, we expect about like 4,590 bushels per acre as a total soybean supply this year, which is kind of 154 million bushels down compared to last year. So in principle, given this a little bit tighter supply, soybean fundamentals should be very strong. But now then the big piece, which is kind of a little bit uncertain and hidden, is the export. So the first of all, I want to highlight this crushing side. So almost every year, like nowadays, we see very like continuous and consistent increase in the crushing, which is also very much relevant to what Gabe explained. The biofuel, especially renewable soybean diesel, is kind of getting a good support and also like very active investment by the industry that combine, and we see very consistent increase in the crushing capacity and crushing activity. So, and even like actually yesterday, we got a new National Oilseed Association, like National Oilseed Processor Association, LOPA. They usually release the monthly crushing reports, and we actually got a record high soybean crushing activity last month, which was above 200 million bushels. And if that actually that trend continues, then I expect actually what USDA expects, which is about 2,555 million bushel. I think that is kind of somewhat realistic goal, like given this current very strong pace of soybean crushing these days. And the other issue is probably exports. So USDA actually kind of adjusted the export number considering very weak purchase of China, but still like people just like question whether this will be the final number or this can go up or down. So that is really the big, I think, question mark we have currently. But if we just take this number as given, then probably at the end we expect the ending stock in the soybean market will be down by 26 million bushels, which will be giving us 290 million bushels of the ending stock at the end. And the season average price for soybean will be $10.50 per bushel, which is 50 cents greater than last year, but still I think this is not very satisfying to many soybean farmers. This is the soybean yield map. As you can see, a lot of states are colored in blue, which means they have increased yield compared to last year. And national soybean yield is 53 bushels per acre, which is record high and 4.5% higher than last year. And also when you look at the Ohio, we also expect to have 53 bushels per acre, and it is 6% greater than last year. But still, I think compared to other states, probably we have, I think, some room for improvement, I guess. So that is the current situation, and I want to actually talk a little more specific about the futures market, and also I'm going to jump into the individual demand sectors. So for the pork futures market, first of all, like when you look at this nearby futures contract, which is the December 2025 contract, which is currently traded at around $4.30, and kind of actually we have like relatively good price trends or price rally in the futures market, and part of it is actually was because of the slow harvest progress. This might be a little bit of irony, but as people are just concerned about this large, huge supply, many farmers actually had a little bit of a winter challenge, so the harvest pace was a little bit slow, and also many farmers just actually try to use their storage capacity even at the beginning of this harvest season. So both actually contributed to this strong futures market. And even though it was implicit, so I actually didn't put it on my slide, but the other two factors that are not really explicitly stated in my slide is, first one is actually we have really good export progress in corn that really actually supported the strong futures price, especially during the past couple of weeks. And that is because of the weak dollar. And the other one is the Ukraine issue. So I think not many people talk about it, but Ukraine is also having a little bit of issue in harvest pace. So they are having a little bit of slow harvest, and EU market and some other I think African countries and even the Asian countries are usually getting harvested new crop corn from the Ukraine, but that was delayed. So actually we could pretty effectively capture some of this market opportunity, and that really helped our very fast export progress during the past couple of weeks, and that really supported the future market in corn as well. And when the other feature of the corn futures market, when you just list this number of futures contracts, as you can see, the spread is pretty large. Although it has improved a little bit, but currently we see about 28 cents spread between the contracts, which means still market is really incentivizing farmer to store and sell it later based on that. When it comes to the soybean market, the nearby futures contract, which is now I think it is expiring, the November futures contract is $11.13, and when you just move on to the January futures contract, it is traded at $11.01. So that is the current price. Of course, what farmers might see in the local elevator might be much lower than that because of very, very weak basis. So basically, their local soybeans are quite a bit discounted these days. Okay, and also recently the slow harvest progress ameliorated bearish pressure. But also I want to highlight the basis risk in this early season because many farmers are seeing really low basis. We're going to see the map soon, but that will really harm their cash receipts. And then probably later on, we don't know what will happen, but given the forecast that Brazil is going to have a record high production and supply, probably there will be pretty much huge downside risk in the second half of this marketing year. So the future price risk will be more pronounced in the later this marketing year. Okay. And the other feature I want to emphasize here is 40 cents spread, which is even bigger than what we are seeing in the corn market. So basically, soybean is really getting the incentive to store more at this time, given this current futures market structure. Here's the map of the basis, and basically, left one is corn, right one is soybean basis, and by and large, nationwide, we are seeing very, very weak basis. So I think almost all regions are having a negative basis. And when you just look at Ohio area, we see almost minus 10 to minus 30 cents basis in corn and minus almost 20 to I think 50 cents minus basis are pretty prevailing in soybean markets, Ohio. So that's the current situation. And now I want to actually talk about a little more details about each demand sector. First of all, I want to maybe talk about this corn ethanol, the corn used for ethanol production. So I think, as Gabe explained, this is somewhat similar to what Gabe actually showed you before. So when you look at the corn used for ethanol production, it is pretty much stabilized or even plateaued. So based on USDA's prediction, we expect almost 3% increase compared to last year in corn demand for this sector, but still, I would say this is pretty mature stage, and not sure even this 3% increase will be feasible given the current structure of the policy and facilities. So basically, it might not be possible, or even incentive-wise, probably we will need a higher blending RFS policy to get this goal. So that is the current situation. So I would say maybe demand sector, especially for ethanol. Corn use for ethanol is going to be solid, but it's not going to be dramatically changed. The other issue, or maybe the other interesting component in demand will be the biodiesel versus renewable diesel. And this might be pretty similar to what we saw from Gabe's presentation, but one feature that we could see during the past couple of years in this biofuel market was the very remarkable increase in the renewable diesel production. So as you can see in the sky blue line in the slides, it has been a major market shifter. The renewable diesel has been a major market shifter, supporting soybean fundamentals during the past couple of years. And probably a little bit of uncertainty, as Gabe explained already. So will be quite a bit of challenge, but I think probably we will have pretty strong support down the road anyway, because we already have pretty good investment set up and already planned. So altogether, and I think governments are also recognizing the importance of this support for the farm community as well as energy markets. So we're going to have actually, I'm pretty hopeful for this side. And talking a little more about this renewable diesel, let me switch gear to soybean side. So when you look at the soybean market, I think this picture is actually well describing what's happened during the past 10 years in soybean. So for instance, when you just look at the 2013-14 through maybe 2017-18 markets, both corn, soybean export and crushing, they were just somewhat balanced. So they had almost 50-50 portion in our soybean use. And then later, as you can see, the bar of blue has been just fluctuating depending on the geopolitical issue and depending on the South American crop situation. So altogether, we are seeing somewhat continuous decline in exports for soybean use. But also when you look at the orange bar, we actually, since 2019-20 or 2021 market, it has been just continuously increasing, which is actually indicating quite a bit of a structure change. So we actually now transforming our soybean model from a little more domestic reliance rather than export reliance. So I think that transition is somewhat inevitable currently because we already started this driving and it's just a matter of time. But now then this actually consecutive decline in export is basically driven by China. China also kind of had a little bit of long-term strategic stepping away strategy from the U.S. market. So they just tried to decouple, but it was not as much dramatic or drastic that we have seen this year. They just actually try to reduce it by 8% or 10% every year, so that eventually they can just make the portion of their soybean from the U.S. in a maybe somewhat modest level. That was, I think, their goal. But given that structure, we see how much importance in the renewable soybean diesel and soybean crushing and domestic use for the soybean market down the road. Okay, and this is actually part of my research project. So when I was analyzing the futures market, especially soybean oil futures price, soybean meal futures price, and based on that, here the only thing I want to emphasize is actually oil share. So oil share is actually kind of a way to calculate when people just crush 1 bushel of soybean, how much portion of revenue can be actually obtained from the soybean oil. So previously, as you can see in the blue line, it used to be at around 30%. And then, since 2000, regardless of the ups and downs in the soybean oil or soybean meal price, there has been a substantial increase in soybean oil share portion, which means the value-added portion by the soybean oil has substantially increased, and nowadays it is at around 50%. So this actually kind of signifies the importance of the renewable diesel activity in the soybean market. So that's the other thing I want to emphasize here. And this is the map that I got from Scott Bird, who is the chief economist in American Soybean Association. So, and the map is showing that actually the crushing activity across the U.S. So in Ohio, we I think 2 years ago we got a new crushing facility completed in Sydney, Ohio, which is Western Ohio. And as you can see in the red circle, a little bit north of here, which is Upper Sandusky, this is in progress. So we are expecting a little bit of active expansion in soybean crushing as well. So it is just local and also across the country situation that we are having this very kind of substantial transformation in our soybean market. Okay. And this is also part of my research project, but I want to share this because I think this also means what does that mean to individual farmers? And what I want to emphasize, actually that does matter because this all transformation actually affects farmers' income and the cash receipt they pay. And how I could get it, because when I just compare the basis trend, I actually did a little bit of analysis. The first one with Iowa, and the other one is Ohio and Michigan and North Dakota. These 4 states had a substantial soybean crushing expansion during the past couple of years. So I just picked the major expansion period and compared the basis trend before and after. And as you can see in the red line, there is a substantial increase, or at least significant increase in the basis trend, which means actually farmers' cash price has been improved thanks to this expansion. So obviously this is not just something relevant to the macro level issue, but individual farmers obviously can get benefit from that. And also, I didn't put this in the slide, but one of the other research projects is this is not just price support, but also when I'm testing this with the Mississippi River drought, so whenever this market shock happens, which presumably decrease the price, this crushing expansion actually helps mitigating that kinds of shock. So it not just increasing the price, but also it improves market resilience. So in many aspects, I see the benefit of this soybean expansion, the crushing expansion, transformation in the market. Okay. So now a little more interesting part, which kind of makes Ian and me very busy these days. We always every day we try to keep track of what's happening in the international market. So I will talk a little more about that. So first of all, this is an old graph because still USDA, FSA, FAS is not really updating the data set. So, but this is corn market progress, and the survey stopped in September. So as you can see, we only have 3 data points here. But also, you see, there is a huge trajectory increase in the forecast. So what USDA forecast is above 3 billion bushels of total corn export. So obviously, we had really strong start at the beginning of this marketing year, and it seems USDA expects this going to continue. And when you look at actually the right graph, which is showing the country-specific export performance, and let me explain a little bit about this structure of the graph. I'm just showing the top 6 U.S. corn buyers in the international market, and the left one, Mexico is number 1, Japan is number 2, Colombia number 3, South Korea number 4, EU number 5, and Taiwan is number 6. That's currently who purchased most of our corn in the international market. And the gray bars are indicating how much they purchased more or less compared to the same period in the previous marketing year. So basically all these trading partners purchased much more than what they did compared to last year. Lastly, the blue dots in the graph is corresponding to the right y-axis. So until this point, only September, how much grain they purchased actually. So for instance, Mexico, when you look at that, they just purchased a little less, 400 billion bushels already at that time. So Mexico is obviously the number 1 and I think, getting the most important market for us now. But also we see that many actually countries are becoming a major trader, because now China basically disappeared from the chart. Not just because of the boycott that happened this year, but even when you look at the last market year graph, we also didn't see the existence of China in the corn market. Okay. Here's the soybean chart. This is probably by contrast, in soybean, we really had slow export progress. As you can see, even compared to the past couple of years, we had really low soybean export, maybe for 2 reasons. First, maybe China didn't buy it, but also, in principle, we actually are supposed to have lower supply in the market, so that also made our export progress a little bit sluggish. So both combined, anyway, we are expecting in total export to be 1.6 billion bushels. And when you look at the chart on the right, with the same structure, Mexico again is now becoming the number 1 soybean buyer for us, and Taiwan is number 2, EU number 3, Egypt number 4, Indonesia number 5, and Pakistan is number 6. So that is the current market structure. And just for comparison, this is actually was almost the final chart that we had by the end of the last marketing year. So last marketing year, China purchased, when you look at the blue dot, it purchased actually about 900 million bushels. That's what China purchased last marketing year. Even though that was 8% down compared to 2023-24 marketing year, still it is quite a bit. It is actually a significant portion of our total export. Almost, I'd say, half of our export was still taken by China. And now, so we will see how much China can buy based on the commitment that they made just a few weeks ago. Okay. And I also kind of had to search and read some ugly HTML files, because USDA basically didn't provide the database service. So I just had to, and I kind of tried to nicely put the table here. This is actually released yesterday. So pretty. And here, as our interest is corn and soybeans, I want to emphasize these two rows. So for instance, they usually report metric tons, so I actually convert them into million bushels here. So this week, so just last week, the week of November 6th, we actually made also pretty good corn exports. When you compare it to the third column, which was happened last marketing year, you see a substantial increase even compared to last marketing year. Remember, last marketing year we had record high corn export, and even compared to that, we are making much faster export progress, so which is very encouraging. And just when you check the cumulative corn export up to date and compare it to the previous marketing year, year-over-year change is almost 263 million bushels greater than last year, which is 73% increase, which means a lot. So that's the first observation we see. The other part is soybeans. Soybean export, now I think we see a little bit of uptick in the export pace, which is I think very encouraging. And as Ian mentioned, we are kind of hearing some of the good news that China finally trying to fulfill the commitments. So that's going to really help our soybean export progress down the road. And cumulatively, we see still like it is almost 274 million bushels down compared to last marketing year, and it's going to be 42.5% down. So that's the current situation that we have. Okay. And I think I don't have to explain this chart because already well covered this, yeah. But like the only thing I want to emphasize is when you just look at the total Ohio soybean export, we made like 0.8 billion bushels soybean export last year, and this year we already finished third quarter and we only made half. So we only have like 1 quarter left. This is calendar year, not marketing year. So like within the three months, I don't know how much we can actually fill the exports and fill the gap between these two different years. So that's one thing that I want to note here. Now, let's talk about the world situation, so that how our competitors will do for the rest of this marketing year. But before that, I want to emphasize worldwide we expect about 55.5 million metric ton increase in total corn supply or corn production, and most of them actually are just taken or happen in the U.S. So U.S. is driving up this total supply, and this actually kind of implies that how much our corn production increase is sizable. So I think that's one thing I want to emphasize. The other one is, even though EU having some production issue, Ukraine is expected to have an increased production. So probably like the competition in this area now, EU becomes like one of the major actually like corn destination in our corn market. So EU becomes very important. But also, like probably this year, we will have a little bit tougher competition with Ukraine, given this improved production in Ukraine. But also, I heard that Ukraine still like suffer from the kind of lack of facility and logistic issue. So I don't think like they can like come back to the full like capacity of performance anyway. So I think I'm pretty hopeful that we can still like have a pretty good portion of EU market in our exports. For soybean, not only in the US, but also worldwide, we expect actually somewhat modest decrease in total production. And that is actually going to, this is actually why I said that in principle, soybean should be pretty strong in this marketing year. So if we see actually some of the sluggish or like weak price in soybeans, then it might be actually a little bit tricky issues like geopolitical tension or tariff or like the trade relationship with China or whatsoever. So those kind of things. And the other one is probably the competition with Brazil. Brazil still like thinks that like they are gonna keep like increasing their soy production, and again they are just probably are expecting to have record high soy production and supply. So we expect that probably as of January, this competition will come. So many people think that probably this time window until maybe December, we might have a little bit of, if China reopens and actively engage in our export sales, then probably we are going to have a little bit of market building, and then we are going to have a little bit of slow down once the new crop from the Argentina and Brazil comes to the market in soybean, and then probably after May or June, probably we will see a little bit of optical gain in our export performance. That's not what many people expect from now. So now, actually, I want to just talk a little bit of uncertainty or like the wild cards I want to highlight because I now have only 5 minutes left. So probably uncertainty will define the current market year. Probably I don't have to talk more about the tariff because I think it's already well covered by the previous speakers. So currently, like based on this trade tracker from the Michael Lewis in Fed Minneapolis, he actually kind of kept track of this data. So I also just adopted that. This might be a little bit different from what Ian and Ben showed, but based on his calculation, I actually have some notes of how he calculated it. It is 14% in quarter. But also, I think still we are in the process, as Ian mentioned, probably there's some policy uncertainty, Supreme Court decision uncertainty, all these kind of things are really kind of adding uncertainty on top of uncertainty. So this lingering uncertainty, we should know that this is going to be costly, especially to many individuals. So that is one thing as a wild card, and also probably the value of storage will be very critical this market year. And the other thing, as I'm talking about policy-wise, many people just ask this question: is the era of comprehensive farm bills ending? Because people just talked about it, and then now even I think they are giving up to follow the farm bill update. And actually, recently there was a survey that Ag Economist Monthly Monitor. They asked, when do you think Congress will pass a new farm bill? And majority of people actually think that we are not going to have a comprehensive farm bill, and a piecemeal approach for authorizing farm bill programs will be the new norm. So that is just probably answered by 39% of economists. So people are nowadays pretty skeptical of having a comprehensive farm bill. So that is going to also add a little bit of uncertainty down the road. And the other one is, I think as Chen T mentioned, the New World School bomb. This is not just a lifestyle issue, but I want to emphasize this chart. This is actually the data that I brought from USDA NAS, but I only captured the data coming imported cattle, which is not for immediate slaughter. So basically, technically, they are supposed to eat some U.S. corn. When they were imported, they're gonna take some time to grow and consume some domestic corn. So this is a good indicator to understand how much corn feed demand will come. And as you can see, as of January, because of this disease issue, the New World School bomb actually really affected our cattle import. And already we saw that this year, especially from January to July, the imported cattle is only 34% of last year's, and that already affected USDA's estimates that we are going to have a reduced corn use for feed. And if the situation, I do see the situation is resolving, so probably we are going to still under effect of this situation. So we should keep our eye on this issue. And probably this is the last issue, but also somewhat relevant to what Margaret explained before. So probably this is something about the information, the provision, and public resources that we are getting. We thought that this is maybe just forgiven, but after government shutdown, we now know that how much valuable they are. So, and also I think nowadays people think that, especially when it comes to the grain market, corn supply estimates are still in a fog. So people think that maybe just we agree to disagree, and people usually just easily followed USDA's estimates before, but now I think people resist and think just keep their different opinion and build their own strategy for themselves. So who knows how the USDA actually will change their number, but this is actually what's happened last marketing year. When USDA had quite a bit of discrepancy in September estimates, you see that eventually market followed the reaction and followed the estimate, and then USDA also adjusted. So there was kind of some harmonious adjustment process that we had before. But now we see this kind of consistent discrepancy between the view of USDA and market participants. So this is going to be not just maybe the supply number itself. I would say this might be a little bit of a structural issue that we are going to have for the next couple of years. If probably this might be a long-term risk, I would say, because if this kind of like frequent disagreement happens again and again, then maybe like the victim of this information friction will be mostly just individual small like family farms. When it comes to this kind of information friction, large companies who have like already like economist team, analyst team, and database, and their own survey, they have really like good just information anyway, resources they have. But the small like family farms, they usually heavily rely on these kind of public resources. Then they will have a trouble with building their own marketing strategies. So this is something I want to highlight as well. So like this is my actually like kind of final slide. I just actually put the thank you note and also maybe the quick summary of like my understanding or my outlook here. So if I have to describe the corn and soy market both, I would say I feel like it is kind of balanced on a knife edge. So we are kind of having pretty good balance currently because for corn market we have large supply but also pretty strong demand. So currently I think this balance is just maintained. Soy market we are a little bit like worried about but also pretty hopeful. So kind of I also see the mixed sentiments in the soybean market because we see now China is opening up and try to buy a lot of soybeans. So optimism is existing, but also like people are worried about whether this commitment can be fulfilled or not. So like altogether, I think we are kind of at some like very balanced equilibrium point, but it is very, very subtle. So it can easily change depending on what kinds of news can come for the next just couple of weeks. So that's my like, and probably my last point actually is probably I'm relatively pessimistic person like, when it comes to the market outlook. So China promised 12 million metric tons like, to purchase by the end of this year, and people think that this is going to be really excellent and probably will like, make a soybean market very, very bullish. But I'm actually somewhat skeptical of it. That number itself is pretty realistic, I would say. But if we just convert this 12 million metric ton, it is only 441 million users, which is just half of what they purchased in the previous market year, or maybe less than half of what they purchased even. So given that, if they do not purchase actually much more than this, we are not going to see a very strong support from the Chinese demand anyway. So just keep that in mind. And also, in the second half of the marketing year, we will have to compete with Brazil. So that is going to be another, anyway, scheduled market challenge. So altogether, probably, we have to be like somewhat cautious and probably try to capture like better market opportunities down the road. With that, let me finish and open up the questions. Thank you very much.